Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market. So here's mostly the same tricky situation as on the euro. Once yesterday we just talked about the possible upside pattern here. If you remember, yesterday we said, well, if market will close around this line and then this top, so we could get the bullish two days bullish grabber, something of that sort. Suggest our prediction, because initially we considered this A, B, C, D pattern, but by the close price of the day, situation has changed drastically, and you can see we've got instead a bearish grabber, guys. So take a look. That market here trend has turned bearish. That was failure breakout of the MACD line. Market close here. That was bearish grabber. Grabber suggests the taking out of these lows. What does it mean? It means that currently chances on upward continuation, at least from the technical point of view, now we're not considering any external political, economical factors that could be very could be surprising and unexpected. So it obviously that anything could happen at any time and any moment. But currently, based on the information that we have here, but this grabber overall situation suggests the taking out of these lows. It means that we turning right now back to the idea of this butterfly, completion of our 3-drive pattern, and drop to the 1255, 1260 area. So that's what we see right now from the technical point of view, at least on the pattern that we have. It means that if you still believe in some upward continuation here, on kind of maybe ABCD pattern, this could be formed, well, you need to keep an eye on the risk that you have. And if you still will take the position, long position here in the current circumstances, you need to move stops to break even as soon as possible. So because this pattern overrule the patterns that we have on the intraday charts, because it stands on a higher time frame and it's bearish. I am talking about this because if we'll take a look at the 4-hour time frame chart, take a look what we have. Yesterday, when we started our discussion, we were on top of this candle, but a few hours later, take a look what we've got. Situation has changed in opposite direction. As soon as this candle has been closed, we've got two grabbers, bearish grabbers here, that suggest the taking out of these lows, and that has happened. Market just collapsed down. Potentially here we have the situation the same as on the euro currency. As on the euro, these lows still valid, and the euro currency they are valid as well, but this retracement stands very deep. Potentially we have the Gartley steeple to buy pattern, as you can see, equal A, B, C, D retracement. OP stands at 1274, where theoretically could be opportunity for taking a long position. But we have the bearish grabber right here on the daily chart that suggests the drop below these lows. As you can see, currently risk of taking a long position in the current circumstances is significantly higher. And if you somehow still will decide to take the long position here, with the anticipation of possible upward action, because here we have the two different targets. First of all, this is COP of this larger daily A, B, C bottom pattern. COP is 1292, but that is also minor. AB equals CD is OP target 1292. And if you still will take position long here, if market will start to show minor reaction on this Gartley steeple to buy pattern, move stops to break even immediately as soon as possible, because you have the risk factor on the daily chart as bearish grabber. For conservative traders in the current circumstances, I would not consider any long position currently, at least until the grabber will be erased and market will show clear signs of upward action. Because currently it seems so that market is turning down. Recall what we said in the weekly report. We said, yes, where I wonder what this rally is and whether it will get any continuation, but at the same time we're prepared for returning to the downside in any moment, because we have the three drive buy pattern on the weekly chart. We have two side-by-side potential butterfly, and the right wing of this butterfly that we are seeing on daily. So this is left wing, that could be right wing. Right wing of the butterfly could start at any moment. on this thrust because we have incompleted major targets in 1255, 1260 area. And that's why this factor we need to keep in mind every time when we're thinking about taking a long position here. And if you still would like to go long, first of all, get the clear pattern on your back. This card is cheaper to buy is clear pattern, but as soon as market will start to respect, move starts to break even. So that's necessary condition for taking any long position. So that's our current view on the gold market as a bottom line for conservative traders. Do not take any positions at all. Just watch for, if you would like to take long, wait when the daily grabber will fail. If you would like to go short, wait for a clear bearish pattern that you could use, because currently this is the bullish pattern. The bearish pattern could be, for example, if market still will reach the COP, this will be large catalyst cheaper to sell. That's not opportunity to go short. Well, if you have the bullish view, well, you could try, of course. I can't just forbid you to do this. So you could try to take the long, but keep in mind the grabber and move stops to the break even as soon as possible. So that's our view on the gold.